There's a common mistake that most traders surprisingly make over and over. In this video, we'll reveal what it is while teaching you how to catch big stock moves with 3 real-world examples that are setting up right now. I'm Mike Bellafiore, and we're one of the top proprietary trading firms located in New York City and proud to have developed numerous 7 and even 8-figure per year traders. Watch, take notes, and learn so you can grow your trading account.
Happy Monday, traders. I hope you all had a brilliant weekend. I hope you all had a wonderful trading week. And first, I wanted to say that, of course, we've got Thanksgiving coming up this week. So firstly, I'm sure a lot of you are getting ready to travel, to be with friends and family and enjoy the upcoming holiday. So I'm wishing all of you a wonderful Thanksgiving day, a safe and peaceful and relaxing holiday. Before I get into it, what to expect from today's watch list video. I want to share some brief commentary first about what we saw in the previous week, share a couple lessons and key takeaways, and then stick around for the end of the video, and that's where I'm going to be sharing a couple fresh ideas for this week. So let's get right into it, guys, and what an incredible week it was for the markets. I mean, we can see that right here, just looking at the chart of SPY. We had further upside and momentous continuation from the previous week. Now, obviously, as given kind of the heads up in the previous watch list, we had the CPI to thank for that. And notably, the tech sector, which has really been the driving force in previous weeks and months, didn't actually lead the way. That's not the sector that led the way. Instead, XLF and consumer discretionary sectors, they displayed relative strength. And so, obviously with the fresh catalyst being inflation. Now, that's something to take note of going forward into year end. Now, before I get into a couple of fresh ideas, as mentioned, I wanted to touch briefly on some points and share a lesson with you all. So firstly, before I get into that, the market will be closed on Thursday, November 23rd for Thanksgiving. And then the following day, the market will be closed on Friday, early at 1 p.m. Eastern. So just a friendly reminder, to make the necessary risk, trade management, and adjustments with your scripts if you are to fully automated. Now, secondly, and this is really more for the intraday active equities trader. Let's pull up this chart here. I noticed many traders break some key rules when trading SGD this week. Now, look, full disclosure, I used to always get in trouble, my first year, 2 years of trading by shorting stocks early simply because I thought that they were up too much. Now, as you get more experience and as I got more experience, I knew that I needed to employ strict rules and disciplines to minimize those losses, to keep me out of trouble. And I needed to know exactly what to look for in order for there to be edge, for my edge to be present, and in order for confirmation to exist. And when I mention confirmation, that's exactly what I'm referring to, right? Because without confirmation, there's really no opportunity for a trade, right? And so therefore, in saying that, what I'm saying is just shorting a stock because it's this shiny object of the day. It's the golden shiny object. It's the flavor of the day, but it lacks that confirmation and edge. That's a sucker's game. And I definitely used to fall into that trap. But as I got more experienced, I learned the exact variables, characteristics, and the boxes that needed to be checked in order for me to either trade or not trade that symbol. With SGD, many traders obviously on day one got burned shorting it for the reason I already stated. It was simply up too much. However, and what's key and what got me interested in it on day 2 was that we broke the uptrend beginning from day 1. So the day 1 uptrend, we failed to hold the open, we broke below VWAP, and then we failed on a push to reclaim VWAP. So we got a lower high, we got a range that began to develop, we got another attempt into VWAP near the second half of the day, latter half of the day, failed to reclaim VWAP. And what this range does is it gives you a very clear level to risk against, i.e. shorting pops, risking against VWAP. You have a predefined level, an area of risk. You know how much you're in for, and there is confirmation and there is supply, and there is a clear trend to the downside. And most importantly, we're holding below VWAP. Trend is to the downside. And so really that is the best setup that I saw. Sure, one could argue shorting pops right off the open worked. That's more of a hindsight trade. But really, the absolute confirmation for me existed once we had broken the uptrend from day one, change of character, the stock's making lower highs, failing to hold above day one, and multi-day VWAP, intraday VWAP, and lower highs, level to risk against. That's a fairly straightforward, easy short. So the takeaway there, and something that I really want you guys to take away from this, is you need to know what to look for and only act if that materializes. For example, in what I just laid out, there are very key, I would say, variables and factors that provide confirmation and the actual setup to trade against. If you wanted to short SGG, you would have needed to wait for that trend break or failure to reclaim VWAP, lower highs, etc. And all of that would signal a momentum shift and an intraday backside. Now, going forward for fresh ideas, because it's a shortened week, it's a broken up week, I'm adjusting my plans and I'm focusing a lot less on breakouts in large cap names like my idea in DraftKings from last week. And I'm really shifting my attention for this week, because it's a short and broken up week, to more intraday swing opportunities. Now, DraftKings worked out well, but I'm not looking for these particular type of setups for the upcoming week for the reasons I just stated. So let's go over what I am looking for in some fresh ideas. And the reason why already stated, volume might be lower. We do have NVIDIA, a key catalyst. They were going to be reporting earnings this week. So that certainly could bring in some volatility, specifically in the semi industry and space, SMH, that ETF, as well as some other high flyers, AMC, etc. And that could trickle over obviously into tech, which will then trickle over into the overall market. But for the most part, I'm not really focusing on that for plans and trades beforehand. I'm looking at what I would refer to as low-hanging fruit, because I don't expect as many fireworks this week. So SGD. So with SGD, with the stock obviously firmly on the backside on Friday and the trend to the downside, I'm looking to short pops in SGD that will confirm intraday and that are going to fail to base above multi-day VWAP and, over a period of time, the intraday VWAP as well. So specifically what I'm going to be looking for here is I'm looking for the stock on Monday to have a push between 550 to 650 come into a multi-day VWAP and fail to base at those prices, and that would then give me a level to risk against intraday. Then I'm going to be looking for a fade back towards the low of day or low of day close. Now with something like this, obviously because there's a potential for liquidity traps, some liquidity issues in the name, it has an extremely low float, I'm going to stress only entering once I have received and achieved absolute confirmation and a well-defined level to risk against intraday. So for example, stock opens up between 3 and 4s, or a little bit higher, a little bit lower bases, has a nice push up on SSR towards 556, 650, comes into a potential area of resistance, has struggle holding above and fails, then I would look to get short, risk against the high of that move, and I would start looking to cover into 5s, I'd start looking to cover into 4s. But with something like this, I'm going to use my discretion, always be on alert, because if we do, after coming into 5 or 4, have a little bit of a turnaround, put in a higher low and slowly grind on lower volume near the mid to end of the day, then I'm going to look to just get out of the position, because it's not worth the headache on something that is likely going to have drastically less volume than it did on Friday. So that's my plan, and time frame for that would be most likely just an intraday swing trade. The second stock that I'm watching, another I would call low-hanging fruit type of a opportunity, very conditional, purely price action, is in CYTO. And this is stock that had beautiful volume on Friday, over 300 million traded. The liquidity was great, the range was great, obviously a low price name, but in terms of percent move, the range was fantastic. And it soared several 100% and slightly above the warrants at 45 cents. So going forward, and that's really where it failed from, that's going to be a key area that I'm going to be watching and that I'm going to be using and basing my trade plan off of. So I'm going to be keeping it very, very simple here, straightforward, keeping it simple and stupid. And if the plan doesn't materialize, that's okay, no trade. And there is something to say in that, and that is that being okay with not having to trade something unless it correctly sets up based on my plan, that has saved me from unnecessarily putting on trades just because I had the stock on my watch list. I feel like I need to do something, or I located shares of the stock. I feel like I need to use those locates. That's where rules and having the discipline and patience comes into it, and being able to stick to that. And so the plan here is, if the stock pushes back into this key area, into the 40, 45-ish zone, and it fails to hold using 30-minute time frame, 1 hour time frame as a guide, then I'm going to look to short versus the high of that move. Likely going to be around 5 cents. And my target for a trade like this would be a move right back into support from Friday, which is going to be 26-ish cent zone. And if that trade works seamlessly intraday after I put on my position and it trends lower without really any headaches, then I might look to hold it overnight. All right, so potentially for a 2-day swing short. For further downside, lower 20s, but that would only be after covering half of my position into this target zone, taking profits as well as taking risk off the table. And guys, for this week, that is really it. I'm going to be keeping it simple. I'm waiting for large cap stocks to further consolidate this week and then set up further. And really after this broken up week, I think that there's going to be plenty of cleaner charts, large cap charts with high quality risk reward swing setups. So that's it for this week. There are a few other large caps that are on my radar right now, but yet to develop how I would like them to be able to have firm plans in place. So next week, those will be all part of the watch list if they've materialized and developed further this week. But for now, enjoy your holiday. Good luck for the week. And traders, I will see you all next week.
So you're an active trader, not doing as well as you want, not doing as well as you deserve, and you just can't figure out why you can't become profitable no matter how hard you try. Well, let me show you why. This is your competition. The traders in this room. This room right here is full of elite traders, some of whom are making 7 and even 8 figures a year. In fact, our top guys have made nearly 20 million each in net trading profits in a single year. Let's head to my office so I can share more. So you're probably used to seeing videos of lavish trader lifestyles, trading gurus trading off of a laptop for an hour a day, heck, maybe even 15 minutes a day, and then them relaxing on some secluded beach for the rest of the day. Well, all I can tell you is that our traders train like pro athletes. They live and breathe the markets and are continually working on their trading skills. Because at our firm, that's what we found it really takes to make it in this game. I'm Mike Bellafiore, co-founder and managing partner of SMB Capital, one of the world's top proprietary trading firms located in Midtown Manhattan. And we're always looking for trading talent to hire and develop. And not just to trade in-house on our desk, but also to trade from their own home, entirely using our firm's capital. And we have numerous traders doing just that, allowing them to make upwards of 7 figures trading the firm's capital without risking their own money. But to even get a shot at something like that, you need to have the right training. That's why we're doing a new free online presentation in which we share how you can get an interview with SMB to become an in-house or remote trader, trading firm capital without risking yours and gaining access to all of our firm's coaching and resources. And the best part, you don't have to be a profitable trader yet. In fact, we prefer to mold profitable traders with our methods and our techniques. That's why we have just 3 simple criteria that can earn anyone an interview. We're looking for highly ambitious and determined traders who fit our culture first and foremost. So if you believe that could be you, sign up for the free 1-hour online presentation by clicking the link that's in your top right corner of your screen now.